Silicon Valley Bank was a commercial bank that provided banking services to nearly half of all U.S. venture-backed technology and life science companies. It also had operations in several other countries, such as Canada, China, and the United Kingdom. It was established in 1983 and was headquartered in Santa Clara, California. On Friday, March 10, 2023, Silicon Valley Bank collapsed after a bank run, marking the second largest bank failure in U.S. history and the largest since the 2007 to 2008 financial crisis. It was one of 3 U.S. bank failures that occurred in March 2023. The background and causes of Silicon Valley Bank's collapse can be traced back to its investment strategy and the changing economic conditions. Seeking higher investment returns from its burgeoning deposits, SVB had dramatically increased its holdings of long-term securities over 2021, accounting for them on a hold-to-maturity basis. The market value of these bonds decreased significantly through 2022 and into 2023 as the Federal Reserve raised interest rates to curb an inflation surge, causing unrealized losses on the portfolio. Higher interest rates also raised borrowing costs throughout the economy, and some Silicon Valley Bank clients started pulling money out to meet their liquidity needs. To raise cash to pay withdrawals by its depositors, SVB announced on Wednesday, March 8 that it had sold over $21 billion worth of securities, borrowed $15 billion, and would hold an emergency sale of some of its treasury stock to raise $2.25 billion. The announcement, coupled with warnings from prominent Silicon Valley investors, caused a bank run as customers withdrew funds totaling $42 billion by the following day, Thursday. On the morning of March 10, the California Department of Financial Protection and Innovation seized SVB and placed it under the receivership of the Federal Deposit Insurance Corporation, FDIC. An additional $100 billion were expected to be withdrawn during Friday. About 89% of the bank's $172 billion in deposit liabilities exceeded the maximum insured by the FDIC. 2 days after the failure, the FDIC received exceptional authority from the Treasury and announced jointly with other agencies that all depositors would have full access to their funds the next morning. Seeking to auction off all or parts of the bank, the FDIC reopened it on Monday, March 13, as a newly organized bridge bank, Silicon Valley Bridge Bank, and the collapse of SVB had significant consequences for startup companies in the U.S. and abroad, with many briefly unable to withdraw money from the bank. Other large technology companies, media companies, and wineries were also affected. For a number of founders and their venture capital backers, this was the bank of choice. In a video message posted on YouTube on March 15, 2023, the former CEO of Silicon Valley Bank, Greg Becker, apologized to the bank's customers, employees, shareholders, and the public for the bank's collapse.